the management of HCLTech, which is Prateek Aggarwal, Chief Financial Officer, Mr. Ramachandran, Chief People Officer at HCLTech, and they both are now joining us to get a sense of where things are actually headed. Prateek, the company recorded a strong 32% growth in the P&P business. Want to understand that was there any one-off or this was bunching up which actually fueled the growth?
No one-off. Actually, that is the inherent seasonality that we have in the software business. It all depends on which customers and how many of them we are in touch with during that quarter. This business has 7,000-8,000 kind of number of customers. So the seasonality is dependent on the number of customers that have their renewals coming up in this quarter. And every December quarter is a seasonal high, as was this quarter. So that is the reason we publish not the sequential. I mean, we do give that data point there, but we always talk about year-on-year growth, which also for this business was a hefty 5%, which is very good in this environment and certainly for this business. So it was really the highlight of the quarter from a overall company perspective as well, because that led our total growth to 6% on a sequential basis, and also delivered 2-year high of 19.8% on the EBIT margins, because that's the most profitable segment we have.
Right, Prateek, I'm going to come to you again and understand what the contribution is of ASAP and Verizon in the services segment for the company.
Right. So we don't call out customer-wise numbers for obvious reasons. And suffice to say, that was the largest driver for the growth, the Verizon deal I'm talking about, which is, of course, organic. ASAP, which is inorganic, contributed full 3 months revenue this quarter compared to just 1 month in the last quarter. So that gave us about 1% increase on a company basis. So our 6% sequential growth on an organic basis is 5%, which is also very good.
Yeah, 5% organic growth is not bad at all. But let me bring Ramachandran also into the conversation. Ramachandran, if you can break it down, because you are one of those only IT companies, at least the tier 1 IT companies, that's reported an increase in the headcount versus the rest of your peers, which have actually reported a decline. Could you talk to me about what was the contribution here as well in terms of the ASAP acquisition? Did you take more hires from there even for the Verizon deal? And what was the actual gross hiring that the organic business did?
So far as ASAP deal is concerned, that was in the last quarter itself, last month of last quarter. So that numbers were already there in the JAS quarter. O&D quarter, obviously, there was a significant contribution from the ramp up that we had to do for Verizon. Gross hiring numbers, we're not talking about gross hiring numbers, but if you look at the net addition this quarter, after 2 quarters of negative net addition, we had 3,600 plus positive net addition this quarter, which is to a large extent contributed by the ramp up for Verizon, which is clearly the mega deal in this quarter.
And just to add, we also added 3,800 odd freshers during the quarter. So we continue to hire freshers every quarter and have not paused that engine.
Ramachandran, going forward, what is the expected headcount and additional rate for Q4 FY25?
So Q4 will continue our hiring trend for Q4 to support our growth. We have projected growth for Q4. So our lateral hiring will continue for Q4. Again, fresher hiring, we continue to honor our commitments for onboarding. So we will see fresher onboarding happening in Q4 as well. So net, we expect Q4 to be a net addition to our headcount. FY25, it's early to talk about FY25. We will be finalizing our plans in the coming weeks. So far as Q4 is concerned, we expect net headcount growth, both contributed by fresher additions for this quarter, as well as ongoing lateral hiring that we do. So we expect the momentum to continue from this quarter into Q4 as well, so far as recruiting is concerned.
Okay, let's also get in a sense then, Prateek, from you, because despite the strong margin show, the EBIT margin guidance has been maintained between 18 and 19%. Any headwinds in Q4? Are you confident that you can deliver closer to maybe the upper end of the guidance? Because we do understand that some part of the salary hikes even may trickle in into Q4. So are you seeing any impact then of that?
So there is no headwind per se, but the seasonality that I talked about right up front in the software business, that seasonality comes off in the next quarter. So just like we saw 100 million kind of increase in this quarter in the revenues of software, December quarter versus September quarter, March quarter typically tends to be lower, and that again, just like the higher revenue has flown down to the profits this quarter, the lower revenue the lower margins in the software business will be there again as per seasonality. So that is what needs to be factored in. And the salary increments that you talked about, the second phase, will not be too much is what we expect. It should be around 25 odd basis points kind of a number. So I think we continue to have a good margin story for the full year. September quarter was a great quarter, so was December, and we look forward to close the year at a good clip.
Okay, ending the year at a good clip, but then does that mean next year it will be a faster clip and we'll see that 20% margin figure finally? What's your take, Prateek?
I would certainly wish for and hope for that, but in the medium term, as of now, we are sticking to 18 to 19, and 19.8 was the seasonal high in the December quarter. For the full year, we expect ourselves to be somewhere in that 18 to 19 range, and our aspirational margin band continues to be 19 to 20, around the number that you talked about. But in the medium term, as we come out of this slower growth kind of phase that we have been going through in the last 12 months and beginning to see some green shoots now.
So, Prateek, what is this time when it comes to deal wins, because we are on the lower side, do you think that you would attribute it to the seasonality factor? What's the broad quarterly range?
I think our range for the deal wins has, for the last almost 8, maybe 10 quarters now, is around that 2.5 billion. So average sort of comes to around 2.2 or something like that. Last quarter was an exceptional quarter where we booked almost 4 billion, which was 3.9 to be precise. And that was, 1.8 billion of normal other deal wins, and 2.1 came from the large mega deal that we announced. So comparing against that, almost all-time high kind of a number would be unfair to this quarter. And if you look at it, December quarter, because of the holidays and because of the second half of December being a little light, has a little bit of seasonality, but I think it continues to be in that 2 billion-ish kind of range.
Sure, Prateek, but any sense, is the overall discretionary environment now improving? Because that's the big question, and that will, decide whether in FY25 we'll see that double-digit growth come by or not. What's your take? Will FY25 be better than FY24? Will we come back to that double-digit growth mark?
We certainly hope for better discretionary in the FY25. Unfortunately, as of now, we are not able to call out any major swing. We are seeing some green shoots in our ER&D business. ER&D, even outside of the ASAP numbers, showed a 2.5% sequential organic growth. And even last quarter, they showed 1.6% organic growth outside of ASAP. So we are seeing some green shoots there, but in the IT and business services, which is the larger segment, we continue to wait for discretionary to really come back in a big way. Fingers crossed.
All right, and Prateek, BFSI has declined. The manufacturing as well on an organic basis seems weak. What about the internals when it comes to the various business segments?
I think, the right way to look at this metric is the year-on-year growth, because that factors in the seasonality. And you talked about BFSI. So this is the one vertical where the furloughs during the December quarter are the maximum. And therefore, that -1% that you see there is basically because of that. But if you look at it on a year-on-year basis, because the furloughs were there in the previous December quarter as well, that is a very healthy 12.9%, which is quite market leading, especially in this environment.
Sure, point taken. Thanks so much for making time and speaking with us, gentlemen. Appreciate you joining us on the show. The stock is reacting positively. It's up around 4% in the trading session, but